following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rocking tune means it's time yet again for the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as the ever-expanding Options Insider Radio Network. And as always here at the top of the show, I want to encourage you, dear listener, to play along with us here on the Option Block All-Star Panel, and you can follow along on theoptionsinsider.com, where you can find all of the unusual activity alerts we're about to discuss, all of the breaking news from the options market, some education, some analysis, and of course, you too can make your voice heard on the show by sending us a comment, sending us an email, or even finding us on Twitter or on Facebook. A lot of ways for you to join us here on the program and make your voice heard, so be sure to take advantage of them and let us know what you're thinking, because at the end of the day, the show really is all about you. If you don't know what you're thinking, we're just going to go off on another tangent about some crazy 80s thing that you don't want to hear about. So by all means, write in and let us know what you want to hear about. And joining me on today's all-star panel, first off, digging out from, or perhaps about to be digging out from an impending nor'easter, is none other than the Rock Lobster, beaming in all the way from the great state of Maine, none other than Andrew Giovinazzi. Andrew, do you have your axe ready to hew some timber and keep your family warm ahead of this massive snowstorm heading your way?
Actually, you know what? The chainsaw's in the kitchen getting warmed up for tomorrow. Yeah, I'm out of wood, so I need to take the day off and cut some trees down. I have some dead ones, so yes.
Somehow I can't picture you with a chainsaw. I picture you more the Paul Bunyan out there with the twin-bladed axe, swinging away, splitting logs like old Honest Abe.
You know, that slave driver Sebastian doesn't give me a lot of time. You know, so I got it. It's a chainsaw or nothing.
You got to make do with what you get, I guess.
Exactly.
All right, and speaking of splitting logs and doing things the old-fashioned way, we are also joined by the man beaming in from the great state of St. Charles, none other than Uncle Mike, where he says it is snowing quite heavily out there right now. I'll have to take your word for it, Uncle Mike. I can't look out my window right now. So how are things in the great principality, perhaps, of St. Charles?
Oh, loving life as always. Happy to be on the show, and another great day.
Yes, another great day, and perhaps another opportunity for you to break out the old snowmobiles. I know you're quite excited and champing at the bit to get going, but we have one more person to add to our motley crew here, and he is perhaps the motliest of all because he has the fanciest hat. He is none other than Alex Jacobson, the Viceroy, a.k.a. the Vice President of Education over there at Options Express. Alex, welcome back to the program, sir.
Thanks, Mark. Dark and rainy down here if you ever get to a window. And I think we're all going to try to get out of the loop before it starts snowing. So
probably wise words.
Yeah, a lot of news today. Ironically, not a lot going on in the market, but A lot of news, and we'll talk about that.
A lot of news, you are correct, sir. So I think it's time to get to it and dive right into the trading block.
The trading block.
All right, and those bells signify that it is time once again for the trading block. This is where we break down the day's worth of action. And as Alex just mentioned, wasn't a heck of a lot of action on the broad market, but in some individual names, there was a lot going on. Of course, we finished the day, S&P, Dow, and NASDAQ pretty much down fractionally on the day. Fixed cash a little bit up on the day, but nothing really of note going on there. I think the more interesting action was certainly in some of the single names. And before we go any farther, we would be remiss if we didn't start today's show with Zynga. Zynga just blowing the doors off of it. And if you listen to last show, you know that our own rock lobster, none other than Andrew Giovinazzi, was quite enamored with Zynga. In fact, he was short about 25,000, would you say, Andrew, of the puts there on the 2.5 strike? And looks like that was the sale of the century. Of course, you were talking about perhaps legging into some upside, which for you was unusual.
Yeah.
And did you ever put any of that on before the Zynga explosion?
Yeah, I've got some 3 calls, and I'm going to buy some more farther out.
There you go. You heard the man. He likes what he sees from Zynga.
The problem is how far. Go like to June.
I'd sell the weekly threes, and get the hell out of Dodge.
I know. I think I'll sell the June, like selling the June 2.5 puts, and then buy some 3 calls and something along that. I gotta leverage up a little bit here.
You know, I guess that's the nice flip side of really disappointing the street so much so often, and just having such a mass exodus of executives and really just looking like garbage since your IPO, that it's kind of easy now to perhaps surprise to the upside and get a little bit of juice and a little bit of a pop to the upside. So yeah, I know, Andrew, you've been a big fan of those 2.5 puts for a while, and that seemed to be they seem to certainly have been working out for you.
They have been going out worthless with regularity, which is not 2.5 is always much better than like 5 or 10. And actually, I wasn't ever short the 10 puts, but I did sell some 5 puts, but I had to cover them when it was like 4 or something like that. It was never fun. Well, but it's fun
Zynga
now.
Taketh and it giveth back.
Right. It won't take much for me to get back to above water on this.
It's interesting now.
I see the light at the end of the tunnel.
Interesting now that you're starting to add the upside. I know you'll do the puts like the rest of us when it makes sense. But adding the upside, I know you're a wait and see guy for the upside. So the fact that you're starting to add some upside is interesting. Uncle Mike, I know this is not a typical holding for you. What do you think here, being Mr. Value Investor? What do you think of a name like Zynga here?
I think you should just bet the farm on it. Put it all. Have a hunch, bet a bunch, hammer it.
And in Andrew's case, since he's up splitting logs in Maine, he could literally bet a farm. And
there you go.
It would be a fantastic trade for all involved, I'm sure.
Yeah, this is definitely a trade. I don't know if this would be a core asset, but
so
well, if you think about it this way, between the building they own and the cash they have, that's the market value of the stock. It's kind of, if you're going to buy something, you might as well buy it for the cash and the property when everything else is free. So the market can't hate them much more than they already hate them.
Yeah, that's true. And it's interesting. A lot of the techniques that they pioneered in games like Farmville that everyone deplored have now been osmosed and have made their way into a lot of other gaming products.
Copied.
Yeah, we've been talking about gaming stuff a lot here on the show lately. I was just listening to someone talking the other day about some new full-price retail $60 games that are doing essentially similar things to Zynga. They're kind of holding back content, and even though you buy it, you essentially still have to go out and pay $10 or $20 extra to get to make it a complete experience, and that's totally ripped off from Zynga. So even though the market has beaten them down, that approach seems to be favorable, at least from the business side. I'm not sure if the end user appreciates it too much or not. Certainly probably translates into why Zynga has such an unfavorable public opinion. Not people out there loving the Zynga, even though they like some of the games.
Well, I think they made some missteps. They were feeling pretty large. It sounds like they flush with cash, and it feels like they're trying to right the ship. And they did get there at one point, so they probably can get there again. But
Yeah, they were thinking it was 1999 again there for a while, and they were making acquisitions with their stock, spending $100 million for, I think, a 6-man app developer team or something.
Yeah, it was quite a spring, wasn't it?
Yeah, it was.
On
and
all that stuff.
I think you could certainly apply the term hubris to that, and they think they have learned their lesson over there that, it's not 1999 again. You can't just sling your stock like it's your own personal currency, and that's never going to go down. And they've certainly, I'm sure hopefully those guys who got acquired when the stock was around 18, hopefully they have some knowledge of hedging, because the stock they got paid, not trading about a little up today, up to $3 at least, but still a pale shadow of what it once was.
Yeah, it ain't 12.
And moving on, some other interesting names. It didn't report today, but we talked about them a little bit in the past. Was of course Disney. They reported earlier this week. I thought they were interesting. We've talked a lot about Microsoft being a great premium sale, but Disney was one of the sales of the year here. I think it closed on earnings day at 54.5 roughly, and it pretty much never budged even in the after hours. A little bit of movement there, and it's trading today closed at $54.36, down a little bit, 54.5. So you had I think the straddle was trading a couple of bucks out there going into earnings as well. So this is the name that surprised me as well, because there's been so much news on the Disney front of late, and perhaps this lack of movement reflects the fact that a lot of that has already been priced into the stock, the acquisition of Star Wars, the announcement of the new movies. If you have a little kid, especially a little boy, the Disney has a lot of things coming down the pike for you that are probably going to take a lot of money, I know, out of my wallet. So I'm kind of bullish on the prospects of Disney going forward. And I was surprised they didn't have any movement at all coming out of earnings. I actually was kind of reticent to go into that one. I wasn't sure how to, A, I didn't have time to, like I like to trade, really micromanage my positions, and then B, I expected some significant movement out here. So Disney really just... maybe it's the new Microsoft. Maybe it just hangs in there going through earnings. Uncle Mike, you guys have any holdings out here in Disneyland?
No, but we do try to take people's portfolios to infinity and beyond, though.
How long have you been holding on to that little chestnut there, sir?
I actually have a client who works for Disney, and I couldn't resist that when I said it to him when we first got together as client and advisor. So I couldn't resist.
Of course, I guess speaking before we talk about the gaming.
The amazing thing is he's still the client.
Yeah, no kidding. He's been with us for a couple of years, so.
Oh no, that part after you have him, you guys do a good job. It was when you said, "We'll take you to your account to infinity and beyond," and I don't know.
Yeah. Well, here's another quick story real quick, because Kavanaugh and I both have young kids. And so I was just explaining to someone an option strategy once. And I said, well, because you have your long premium, even if the stock goes to infinity on that put, it doesn't matter. You're still going to lose the same thing. And he goes, really? I goes, yeah, even if it goes to infinity. And then so Kavanaugh just stops me, hits my mute button, and makes a lot of big motions with his arms. He goes, and beyond.
I can see him doing that too, which actually makes it even funnier.
I can certainly see him doing that as well.
He's not a small man. He's not a small man being in beyond. I can see him getting very theatrical.
Speaking of beyond and rallies and the gaming sector we were talking about before, as we're recording the show, another name we've talked about many times on the show in the past, Activision, just reported earnings. And like I've said many times, they usually are a relatively reliable name going into earnings, and they've been pretty much range bound for the better part of the past couple of years. And they closed today at $12, roughly even, trading about 12.5 in the after hours, so getting a little bit of a bump to the upside. And that's actually a pretty high on the old chart for Activision of late. They haven't really traded up at these levels since about well over a year and a few months ago now. So it's been quite a while since they've touched these levels again. So I guess between Zynga and Activision, a lot of love going on in the gaming land, Andrew. Perhaps you've turned us on to something interesting here.
Well, I don't have huge high hopes. I mean, I'm looking like $4 for Zynga in the next 6 months. That's how I would position anything like that. Nothing totally crazy. But if it surprises us in a happy way, of course, we will take it.
And Mr. Alex, what, if anything, caught your eye in today's activity, sir?
To be candid, we were in meetings all day today, but the big story on our side was the ETF world, where Schwab now has added another 90 ETFs to the ETF One Source. I know a lot of the listeners are OX customers, and some of the listeners are Schwab customers. I obviously don't know the mix. I can tell you what the email mix is that I get, and it's heavily weighted to OX. But there's clearly a lot of price competition out there now in the ETF community, And now on the Schwab side, you've got 105 ETFs. You can trade commission free. So that was the big story here today. In terms of the market itself, it was another one of those, days we've talked about on a regular basis, where get that little run up at the end, and by the end of the day, you go home, you're exhausted, and you look at your significant other, and she says, "How is the market?" You go, "Yeah, it's dramatically unchanged." And she looks at you, she goes, "What the hell does that mean? Dramatically unchanged?" But I also have an embargoed story, so I'm just going to tease you on it a little bit. But on Monday, we're going to announce some changes in the commission schedules. So right now it's embargoed through the weekend, but stay tuned for the Monday PM program, and we'll have some new rates to trade at.
Alex, you degenerate teaser, you. Now we're all going to be wondering and scratching our heads all weekend long. I think I can hazard a few guesses, but I won't go into them on the air. We'll have to just wait and see until Monday, listeners. So there you go. You have your tease until our next show on Monday. Before we wrap up the trading block, I'm trying to hold off on it to the end because it seems like we talk about it every day. But I know there is indeed some news over out there in the fruit company land, Uncle Mike. So why don't you run that down really quick for our listeners and what you thought of that?
They're giving away free money now. So apparently there's a guy, his name is David Einhorn, and he is an activist investor for Apple. And I saw him on CNBC early this morning before the open. And basically what he said that a lot of people would really like in Apple would be a type of a preferred share of Apple with a 4% dividend on it. Now, whether that's right or not, I don't know. But one thing that they are doing right now is they're actually filing suit against Apple as shareholders, and that they want some type of money from Apple because of the fact that they have so much cash in their coffers right now. They have $137 billion in cash. So with that, Apple rallied late in the day, and they made it, and it was on a statement. And I'll read it to you. As part of our review, we will thoroughly evaluate Greenlight Capital. That's David Einhorn's company, Greenlight Capital's current proposal to issue some form of preferred stock. So whether or not Apple's going to start paying a bigger dividend or not, who knows? But Apple's looking to get shareholders some of that $137 billion in one way, shape, or form. And that's one of the things that did trigger a little bit of a rally on Apple today, it appears.
That's kind of been a lingering issue with them for a while. You kind of knew that was going to eventually come back to bite them in some way, shape, or form. They could skirt it when they were trading 700, and they were rallying 10% a quarter or so. People were not going to look too deeply into the gift horse's mouth. But now that the name has come off substantially from 700, hovering around the 450, 460 level, trading almost at 470 today, there's a lot of people now asking more questions than they would have before. I think a lot of them are saying, hey, this cash is sitting on the sidelines. I think a lot of that has to go back, too, with his earlier incarnation where he was essentially kicked out of his own company. He had to go begging hat in hand when he came back to Apple for a $100 million loan to Microsoft. So I think in many ways he saw that as a protective cushion, a shield for his company. He wanted to hoard cash as much as possible. And I think now that they're in the post-Jobs era, the marketplace is changing a little bit. The defense for sitting on so much cash is becoming, I think, a little less palatable, as we're seeing to a lot of these investors, especially with the stock down. Give people some money back. It at least ameliorates some of the crowd out there who is calling for your head. Another interesting thing about Apple, I was reading an interesting article the other day. We've talked many times on this show about how cheap Apple is from a fundamental perspective, from a PE perspective. We compare it to Amazon, we compare it to Google, all these other companies out there. But an interesting piece I read this weekend where they were saying that's really kind of the wrong analysis to do. Really, when you're looking at Apple, you really need to look at other hardware makers, because that's really the business Apple's in, and that's completely true. And if you look at some of the PEs of hardware makers, Apple right now is trading about a 10.5 PE. Even some of these names like Dell, a struggling also ran, just got acquired to go public to help it become more nimble. They're trading at about a 9.2. Samsung, one of their biggest competitors to Apple, trading at about a 7.8. So Apple from a PE perspective, when you compare it to some other names in the space, not exactly the bastion of cheap and efficiency that perhaps we had thought. I thought that was an interesting analysis too, just because we always compare it up here on the show to Amazon and some others, and that's really kind of apples to oranges. They're perhaps a little flashier in name, but at the end of the day, the hardware makers, they tend to hover around that 10 and under PE level anyway. So Apple's pretty much at the upper end of that range when you see it. So perhaps an argument for the fact that Apple not exactly even cheap at these levels.
Well, think about this. At the rate they're bringing in cash, by the end of 2013, they if the rate stays the same, they got $300 billion on the books. I think that's $240 a share just in cash. Now, that raises the issue. What do you do with that in terms of a multiple? Do you put a multiple on that they'll spend it? I mean, I don't know the answer to the question, but it's an interesting scenario. Many years ago, when I did institutional, one of the large college endowments had more money than it could potentially ever spend. In fact, it had so much cash that the university could have stopped charging tuition and still run the entire university just by investing the money in overnights.
That's nice.
And eventually they ended up giving it away. There's a longer story to it. They did all kinds of stuff to try to not make money, and everything they touched made money. I mean, literally, when they did community investment, which I'm not making light of community investment, but at the time, community investment was looked at more as a contribution to the community. They started an incubator. It's not a secret story. This is Harvard Asset Management, Stephen Blythe and his crew. But they started an incubator in a blighted community in Boston to help urban startups make money, and the perception was that was really giving back to the community. And they had don't hold me to the number, 22 or 23 startups that they started, and they expected to lose money on all except one, and they made money on 19. It was just one of those we can't give money away.
You can't fail even if you want to.
Yeah. It's the same thing with Apple. I mean, we can talk about near-term price action. We can talk about PE, but man, they'll have $300 billion in the bank, by the end of the year if the trajectory they're on stays the same. And how do you value that? I mean, you're going back to the days of the 60s and 70s where, it was Big Steel and General Motors and things like that. And I don't begin to know how to put a PE on the cash. But
yeah, that's true. You try to really ascribe a meaningful multiplier to a massive cash hoard.
Yeah, and Einhorn's a smart guy. I mean, he's no dummy. A lot of those guys. I mean, last week the big story was Ackman versus Icon, and who was brighter and who was senile. None of those guys got to be billionaires by kind of stumbling their way through it. Einhorn's a pretty smart guy, and there's a value equation in Apple, which, again, you could talk about it from a PE standpoint. You could talk about it from a product standpoint. You could talk about it from the benchmarking. Everybody who starts a new business, if it works, they say, well, we're trying to achieve, what Wozniak and Jobs did in the garage. You say, well, you can't kind of plan for that. That's magic. That's the business Disney's in. So it's an interesting scenario, but as this cash grows, man, what are they going to do with it?
They're going to give it all to Uncle Mike, and he will be a very happy man out there in St. Charles, Illinois.
We'll do share buybacks and hedged share buybacks. That's how we'll do it.
I like it. All right. I think that's going to do it for the old trading block. And now, Andrew, I am doffing my fedora and putting on my trench coat. I suggest wholeheartedly that you do the same, sir, because it's time, once again, for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, Andrew and I are suitably equipped to dive into the old odd block and explore the seamier side of the options business. And when you're talking shady, when you're talking dubious, it doesn't get much better than the realm of paid education, particularly when you're talking an odd block staple. Good old DeVry, of course. DeVry, ticker symbol DV, getting some love today. They had earnings yesterday, and the market apparently liking what they're seeing. They closed yesterday at 25, closing today at over $30.41, up about 16.5%. So, Andrew, what say you that we start there, sir?
Yeah, I do. I'm a closet liker of these education stocks. I just think kind of the worst is over for them. They're all cheap multiples, but people want to learn.
Says the man in the paid education biz.
Exactly. You know what? And I think Mark and I, you can teach people this way. You know, it works. Anyway, yeah, that is a good disclaimer. Says the guy in the teaching in the online education business. So,
I like that as the marketing slogan, the option pit. It works.
It works. That's not too bad.
I think, doesn't someone have it just work somewhere out there? I might have to look. I think it might be a craft thing or something. Yeah, exactly. There you go. Do stuff. I like it.
Do stuff. It works.
Do stuff. It works. So DeVry, actually an aggressive seller of the March 30 puts in DeVry, and like 100 lots, 200 lots, 300 lots, but 4,500 total in a name that only trades 880 contracts a day. Selling them for $1. I thought that was a pretty aggressive sale, given how the market was in the tankola, for most of the day when this went up. So, it's feeling like they're calling the bottom,
Yeah, get definitely some love flowing in here for DeVry. We also saw nearly 9,000 of the Feb 30 puts going up today. They have open interest of about 4,000. Looks like the amount going out to March is about equal to the open interest we got there in Feb. So maybe there's a bit of a roll going on too from Feb to March.
At March, there was zero open interest when I saw those puts first go up. So.
A lot of volume lighting up the tape. We gotta love these names.
Somebody made some pretty big going.
Gotta love these names where the now at the money strike has zero open interest. That means all activity is unusual at that point.
Exactly. Everything is weird. Now here is another. I found these trades. I like these trades this morning because the market looked a little ugly, but these people had no fear at all. JPMorgan, a name, the whale, blah blah blah. And that was funny because that was, a $34 stock. Now it's a $48 stock. And a huge block of the 47 puts trade for 60 cents, over 22,000 times this morning. Again, I would call that an aggressive sale of puts. I mean, JPMorgan average contract value is huge, over 100,000 contracts. Open interest was 6,000 only. So again, this is opening paper, whacking the strike, took the volatility down. I'm going to say almost a half a point. So again, aggressive opening sale of puts. Boom. Thank you very much.
That is interesting considering that, they did get crushed post-whale, obviously, and have rallied, about almost 15 points since then.
Yeah.
And yet this guy essentially putting the marker down on the 47 strike, saying there shall be no further whales.
I know. Now, one thing when I put the unusual activity up, I always like to put the current stock price and where the stock has just been to give the readers a little taste of where things are and where they've been. So I thought, again, very interesting. Now here's another name that's come up again for me. I think we reported this last week. I don't know if it made the radio, but it's on the website. Marathon Petroleum, another big buyer of calls. These are the Jan 2014s. I mean, this is not a small purchase, okay? Buying 20,000 of the Jan 2014 90 calls for $3.90, okay? Again, traded right on the offer this morning. It's like basically it opened up and it looks like they just lifted the offer for pretty much what was there. The average volume in the name is about over 7,000 contracts, and there is 10,000 contracts of open interest. I'm curious to see really, because to me this looks like the second block I have big buyer of options The ticker is MPC for Marathon Petroleum. So I'm very, pretty aggressive buyer of calls. At least as it appears to me. I could be wrong, but I'm pretty sure this is a buyer. They're not a writer. Marathon's trading $77. I mean, the 90 calls, not a crazy purchase. As far as I think if Marathon does move, these calls will move. Not exactly probably how I would do it, but somebody's spending some dough on it. So I thought at first they were overriding them. But as I recall, the paper the last time was buying. It looks like they're buying them again. So
what a surprise. Really... You're not a fan of just buying some upside, huh, Andrew? I thought that was your trade du jour.
Exactly. Buying that way totally Vega exposed upside.
That's the way to go. I'm looking here, at this MPQ, and there has been some interesting stuff going
MPC.
up. I'm sorry, MPC. And, do you see these January 90s really lighten up the tape on 10,000 open interest, and you roll up to April, you see the same thing as well. There's 10,000 open on the APE 85s. Those are still open, but apparently maybe it's a Tosaw special stupid, someone picking up or trading about 10,000 of the April 90s as well going up today. So a lot of upside love here in Marathon for substantial, unless he's rolling up 5 handles. I don't know. It could be doing that as well. But he's not closing, though. He's not closing, so he's just... I think he's doing a Tosaw special stupid. What do you think, Uncle Mike?
Hey, the Tosaw stupid smart is one of the best trades there is.
The Tosaw two-step stupid smart.
That's what we're gonna call it.
Maybe that should be the title of your webinar: How to Make Your Stupid Smart.
Yeah, that is a good one. I like that.
Getting smart with stupids. Something along those lines.
Getting smart with stupids.
See, this is why they pay me the big bucks.
How could anyone resist a title as such as that?
I would tune in for that one. That'd be quality. A lot of upside. I like
your portfolio to infinity and beyond better, though. That's pretty awesome.
A lot of some copyright issues with that one.
Yeah, given Disney's nature of being quite litigious, I can't imagine you're gonna get too far with that one. Maybe one or two before the big empire strikes.
Now there was a bearish trade in activity. I thought this stuck out to me because it's a name that I didn't even know what this says. PHH. That's the name of the company. PHH. Mortgage and fleet management services. I don't even know what that is.
I was at DPM in this name for years. You don't know this one? This is huge.
I'm not falling for it that time. You guys have already got me too much. But the interesting thing was on a day where I saw a lot of puts selling, this was actually paper early and often bought the PPH March 20 puts for between 20 and 40 cents. It was only 2,100 contracts, but the name really only trades 595 contracts a day, and the open interest on the strike was 30. So somebody is not liking the prospect of PPH.
This is another one that's had quite a run of late, going back to December of last year, so over a year now. It's more than doubled. So this could be someone also, and they just had earnings. The name's up a little bit since earnings. So perhaps someone's saying, hey, you think they'll probably put on that hedge prior to earnings, but c'est la vie. They want to lock in what they got here. Perhaps, doubling is not a bad little run over the past year or so.
Right. I think it's following the whole mortgage market and everything else. But I found that up. And the way the paper bought it, like from 20 to 40 cents, I mean, this wasn't one guy buying a block. It was buy them. I want to buy more people buy more. It had a different feel. Like it's either somebody's put in a newsletter and put the sell on it or something like that.
Yeah, I was just going to say that smacks of a newsletter when they're chasing every price level indiscriminately. That means someone said buy them and the lemmings are out en masse.
So I don't know what the deal is with it, but nonetheless, there we are with PHH. But interesting, see if it holds up where it is. But
Uncle Mike, weren't you talking up PHH on your daily newsletter today out there at THH Puts?
No, I do PHA when I work out peripheral hard action training, where you work out the lower body and the upper body at the same time.
Okay. Perhaps a little bit more information than we needed on that one, sir. But interesting, nonetheless. All right, Andrew, thank you.
Way too much information.
Yes.
That's way too much.
I'm disturbed now on several levels.
I'm blistered by that. I don't even know if I can go on.
Well, luckily you can take a seat for a minute and you can take off the fedora, Andrew, because we are going to move away from Skid Row and into some nautical land where the Viceroy shall let us know what's going on in the land of Options Express. Yes, it is time for the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, dear listener, this is, of course, the moment on the show where we check in with Alex and see what is going on, what is causing a stir, what is catching his attention over there in the land of OX. And earlier he teased us with some impending changes in the land of Options Express. Perhaps he has something else of equal import and an interest to share with us. Alex, what caught your eye over there in OX land today, sir?
So the chatter in the social area, the social blog here at OX today, customers were doing a lot of Best Buy. Best Buy and BlackBerry were the names that seem to be coming up most. Apple still comes up a bit. Google comes up a bit. Priceline, Netflix, Baidu come up. We saw Cummins today. They had great earnings. Facebook showed up on the list. So premium selling, we talked a little bit about this on last week's show. And I forecast that there couldn't be more put selling. We were at about 17 to 18 to 1. And the number got bigger. I was wrong. Our short put call is now 95% puts to calls. So we're seeing a phenomenal amount of put selling going on in this relatively modest volatility environment. Obviously, the number could only go to 100, all puts to calls on single leg names. But 95 is the highest I've seen it since I've been here.
Wow, volatility be damned. We're going to blast out some puts. I like that.
Yeah. Well, you know, that's one great question whenever you educate. One of the questions I always ask, someone will say something like, oh, volatility is too high or it's too low. And you kind of pause for a moment. You say, okay, tell me the thought process. And one thing I like to point out to people is volatility is only too low if you expect it to go up in the next few days. There seem to be a lot of people assuming there's more contraction and volatility coming. So,
and I want to chime in on something right here. I heard Alex say this in a presentation back in 2005, and it has stuck with me ever since then. Volatility is low only if you think it's low, and vol is high only if you think it's high. So when people say volatility is low, it doesn't mean there's some type of weird mispricing thing in the options. It's just their opinion that it is either low or high, just like you can make an argument that Apple's low or high.
Yeah, it's an important point to make. Volatility is low if you believe it will be higher going forward. It's not what the absolute number is. It's just your belief that it will be higher going forward. And as we've talked about on many occasions, the real distinction between sort of the good short-term option trader and the great short-term option trader is the great short-term option trader overlays a view of volatility. So, if I thought volatility was going lower and I thought the market was going to continue to go up, I'd want to structure trades that benefit from bullishness but a decline in volatility, which means I'd love things like in the money calls versus out of the money calls, because as vol gets crushed, the out of the money calls on a percentage basis get crushed worse. So, there's an academic side to this and there's a real side to this. And it seems like our client base here is looking for volatility to continue to leave the market. So we live in interesting times.
The old Chinese curse. May you live in interesting times. But what you point out is interesting because we've talked in general terms about volatility, and most of that is, of course, index volatility. But most of the activity you're actually referencing is in single names, and that is one of the few bastions we've still seen in the marketplace of having some actual vol. Some of these individual names are still moving. They're still generating attractive premium. So I'd wager the bulk of what you're seeing on that short put activity is in the single names, is it not, Alex?
Yeah, it's single names. And keep in mind, all of us on the program remember a VIX of 7 and 8. And there's a day that goes by that you don't read an article by somebody who's an absolute genius on VIX, who tells you exactly what it means and is proven wrong over the next 72 hours. So volatility is a little art, a little science, and a little dark art. And anybody who ever tells you they're an expert on volatility or they've got it figured out is, in my view, blowing smoke.
Oh, there goes our whole business.
No, but your business isn't forecasting volatility. It's telling people how to trade it.
That is correct. We do a little. You do have to do some kind of forecasting, as in, because you still have to position for it, right? So if I tell people how to think about volatility two ways, there's the absolute level of volatility and there's the relative level of volatility. So depending on what you're trading and how you want to structure a trade and how the twain meet, so to speak,
yep.
that is what generates, an idea. And I believe that's kind of like the idea of the idea hub or something like that. It's right along those lines.
Well, I've said this so many times that people offer here at OX to get a button made on it. If you're a short-term trader in the options market, and short-term can be 1 month, 1 week, 1 year, long as you exit before expiration. If you're right about trend but wrong about volatility, your trade's going to underperform what you would expect. If you're wrong about trend but right about volatility, your trade's going to outperform. And thing that aggravates users the most, and we've talked about this over and over again, is they buy an option, the underlying moves the way they expected it to move, the vol goes down, and they lose money. Right, and it was like a joke. The presentation line at that point is, what does that lead you to believe? That every market maker is a felon? And then you kind of pause and laugh and say, well, it may be the case, but that's not what happened here. And it's important in a changing volatility environment that you at least have a view about volatility. I know it's not easy to have a view, and Andrew, that's where you and Mark. I would even go farther. I say it's essential you have a view. Yeah, well, I agree. And a lot of times when you teach options to people, they go, oh, you just made it too complicated. But take a step back and you realize all an option contract is some value because of volatility and some value because of the carry equation, dividends and interest rates. And in most instruments right now, most indexes and stocks, with the exception of the big dividend players, it's all volatility. And even if you go out 6 or 7 months, it's all volatility. The 1 year carry is, less than 1%. So it's all volatility. So it's important to have a view of volatility. What happens if you're wrong? Well, at least you'll understand why your trade made or lost money. And I'll tell you, the one difference for the years I've been in this business, the one difference between what I'll call customers and market makers, number one, everybody thinks market makers just coin money, which we all know is not the case. But the other thing
hence the reason we have so many former market makers even on this program.
Yeah. Oh my God, I'm wounded.
I wound myself too, so it's all right, Andrew.
I'm sitting next to the trading desk, and they're all taking off shoes to throw at me now. But the thing about the professional community is they were almost 100% likely to have a volatility view in their trading scenario. And if you look at many market makers or many of the market maker organizations that still exist today, in fact, what they're doing is they're running vol books, so it's important.
Speaking of vol, my little birdies have told me that Uncle Mike is champing at the bit to discuss this topic in some more depth. I think so. It is time to close out the Xpress Block and for Uncle Mike to put on his smoking jacket and light the fire, because it is time once again for the Strategy Block.
The Strategy Block.
Yes, that means it's time for the old Strategy Block. And Uncle Mike, did my birdies earn their keep yet again today? Was I right when they heard, or were they right when they told me that you were thinking about talking about a little bit of implied vol today? Is that correct, sir?
To a point, yeah. I kind of want to expand on Alex's conversation on volatility, and I want to tell you some ways with which I trade for clients in the long-term portfolio, and I'm going to give you a real-life example of how I don't care what volatility does right now, and I'm just focused on price, and I truly don't care what vol does. There's nothing that would do to make me to care about it. I suppose maybe if it went down a ton, but it's definitely a distant part of my radar. Now, to expand on what Alex talked about with volatility, folks, Alex is, when I worked at Options Express and we were trying to get guest speakers for various things, Alex was always number one on my list. He's been my favorite. Folks, if you ever get a chance to hear Alex speak, you run, you don't walk to the nearest car, and you drive to hear him speak at whatever presentation he is doing, because it is phenomenal. I can tell you story after story of things that I've remembered from his presentations on how things got detailed, how one guy had the nerve to tell Alex that market makers see stop losses. That was an interesting discussion with Alex, to say the least. The man's amazing. And what I want to talk to you about is a way with which I'm trading, and it's a trade that I did to where volatility, it's not number one on my list. It's probably very low on my list. This is a trade that I talked about the other day, and it's on Ford. As most people know, I've been getting in and out of Ford for a while now in terms of selling premium. And when Ford dipped right after the earnings announcement, we got down to around, I forget what it was like, around 1280 or something like that. And I sold the March week 1 12 puts, and I got 12 cents for them. And the concept was I'd be more than happy to own Ford at 12. And we got 12 cents for it, so we're getting approximately a 1% rate of return over the course of a month. Now, as I'm monitoring this trade, I just brought up a chain of Ford right now, and I'm looking at it. That option's trading for 6 cents. Now, there's a lot of situations to where I would get out of it if, let's say, maybe I was doing this with, say, the option cost $10, and when it went down to $2, perhaps I would get out. But in this case, I'm probably not going to get out of it until Ford goes down to a penny. And just the ins and outs, the day in, day out volatility. In this case, I do not really look at volatility on Ford right now because of the fact that unless it's at a penny, I'm not going to get out of it. And even if it does go down, I'm fine owning it at 12 anyway. Now, the only times that I take volatility out of the equation is if, number one, I'm cash secured, meaning let's say that for this trade, instead of having $12 or $1,200, I should say, of cash set aside for it, I only had, say, $400 or $500. That's different if you're trading on margin or you're levering yourself. In this case, we're not. We have all $12 set aside, and most of this money is in client IRAs. So for that, in that case, doesn't really matter for what vol does exactly. Now, if I know that I'm probably going to hold it till expiration, let it expire worthless, or maybe get out of it for a penny, and I'm cash secured, if that's the case, that's when I don't look at volatility. Now, let me tell you guys about when I do look at volatility. Almost every other type of trade with which I'll make. If I'm doing a diagonal spread, if I'm doing a credit spread, or we have some calendar spreads that we have going right now because of the fact that implied volatility is so low, in those situations, totally different ballgame, folks. But in this situation with Ford, I'm not looking at it. I'll give you another example. I have another client. He's never done anything with options before. And so he's bullish on a couple of underlyings. So what we did was, for this section of his portfolio, we just did some 6-month out collars. He didn't really like the idea of adjusting options and rolling things, and me doing what I talk about on this show. Wasn't quite comfortable with that, but he liked the idea of having it so that no matter what, it's mathematically impossible for you to lose more than X, and it's mathematically impossible for you to gain more than X, or whatever it came out to. I'm not looking at volatility with him. Now, I'll look at the options from time to time to where if we get a lot of movement and maybe the covered call's worth a nickel, then maybe I'll get out of it. But that's another case with which I would not look at volatility. But every other time, folks, if you have any intention of getting out before expiration, if you're doing any type of levered trading, meaning you're trying to control more shares than what you're actually willing to own, then volatility has to be at the forefront. The only time it's not is if you're doing trades like what I discussed. And that is one to grow on for today.
Good points, Uncle Mike. And of course, it helps when you have those options that are moving towards the zero end of the spectrum. Not too much Vega, not too much else really in the mix there. Anyway, you take an extreme underlying swing to even make those things relevant. So that usually, you're right, those are the scenarios where Vega certainly not top of mind. I suppose it could come into play in some upstream scenarios, but I think in those scenarios you'd be more concerned with your delta anyway, because you're looking at probably some substantial underlying moves in those scenarios. But interesting stuff, Uncle Mike. It's always good to illuminate the other side of the coin as well. We talk about vol so much that perhaps good to remind our listeners that.
Well, that's an important thing about educating yourself if you're going to trade or you're going to invest. So what Mike does is another thing we do at Option Pit, same way. You can take the volatility out of the equation if you structure the trade right. So you got to decide really what you want to do. Do you want to have the exposure? Do you not want to have the exposure? The worst thing, as Alex would say, is you have the exposure and you don't know it, because the volatility will get you whether you think you're betting on it or not.
Yes, certainly not an ideal scenario. Hopefully our listeners have been listening long enough and they're savvy enough to avoid that and at least be cognizant of their vol level, so they at least be aware that they have to pay attention to that. We just did a whole episode of our advisors option show, and it was structured all around that, how important it is to pay attention, what volatility can mean to your portfolio, even if you're doing seemingly simple things like just writing covered calls or buying protective puts. It comes into play everywhere, so you need to be cognizant of that, lest you pay the price and you reap Alex's proverbial whirlwind. All right, Uncle Mike, thank you. You can now doff the smoking jacket and everything else and put out the fire until next week, because now it's time to close out the old strategy block and roll right into Around the Block.
Around the Block.
All right, and those car horns mean that it is time for our final segment, of course, Around the Block, where we tell you what we're paying attention to for the next few sessions. And before we do that, I'll do a quick rundown of the earnings we mentioned at the top of the show. Of course, we touched on Activision in the trading block, still hovering around 1260 or so. So a wee bit of upside here for Activision, getting pushing to the upside of that range, which is interesting, given where that name has been trading of late. Of course, forthcoming, we have CBOE tomorrow before the open. So hopefully you got all of your trades on now. CBOE closing at $34.30. We were talking earlier how this name has been on a tear since the since the announcement of the ICE NYSE merger / takeover. Everyone's speculating that CBOE is the next name to go. Of course, adding quite a bit of premium. This name has adding quite a bit of juice to the stock since the announcement. It was trading about 29 or so, now trading about 34.30 where it closed today. A lot of upside going on there, and a lot of people were looking at some very near-term bearish risk reversals on this name because right after the pop, because it seemed like CBOE was poised to head down the other side, and they worked out pretty well for a while, but you had to be fairly quick in taking those off before it just took off to the upside again and hasn't really looked back. So it'll be interesting to see if CBOE can continue this trend. Looking right now here at the money weekly straddle, pricing in at about $1 So with about 30 cents of juice in it, so about 70 cents. So not pricing in a huge move. Maybe a lot of people thinking that the move has already been baked in here. But CBOE, one of the few highlights on a very dismal year last year for options volume when their VIX options, VIX futures really lighting up the tape. So it might be interesting to see if this is if they're going to continue the trend going forward. Also, Uncle Mike, cover your ears. I hate to say this one with you around, but we do have Cisco next week on the 13th.
Ouch!
It's been long enough now, right? The pain has subsided. The scars have healed.
I'm a bitter man, Mark.
That's true, you are. What do they say in the Hobbit movie? I do not forgive and I do not forget. That is you.
Well, as a Christian, I do, but as a trader, I struggle with such things.
Of course, we also have Nvidea on the horizon, also set to report on the 13th. And the name, too bad Mr. Grigas is not here. This is one of his favorites, one of my old favorites, too. He and I used to share war stories of shorting some downside out in good old Tesla Motors. Another one that's been lighting up the tape since the announcement of their, the release of their Tesla Model S. Motor Trend giving it Car of the Year, getting a lot of love on that. This one really hasn't looked back since then, trading back in October at around 28, closing today at $39.40, almost $40. So really been an extended period of upside here for Tesla. We'll see if they can.
Has that company made one dime yet?
Oh, no, of course not. What fun is that?
No,
making money.
It's the Amazon model. It's market share, not money.
It's having patient VCs.
Yeah.
Nobody is going to ever come up with an electric car.
Have you driven one of those? Anybody driven the S yet?
No, I haven't. I would love to. It looks like I saw one in the wild the other day, and it looked like an amazing car, but I haven't driven it.
My nephew got one on Friday out in Seattle, and he is a VC, and he said it's amazing, just amazing. And he and I are both motorheads, and when you say motorhead, VC, and electric car, it kind of doesn't all fit together, but we've had performance M series BMWs, and this thing outperforms that. It's just amazing.
Can I put my chainsaw in it?
I would worry more about your snow shovel oven.
Yeah, not exactly, I think, ideal for the backwoods of Maine type of car in the winter.
Do you have an electric chainsaw or gas-powered?
It's gas.
I'm about 40 feet from the TVs here, and they're doing a weather report of the Northeast, and it's not going to be a fun weekend.
I know, but I like to ski. We need snow. My kids want to go build igloos.
Yeah, well,
I have like little Eskimos for kids. I mean, they like,
Cool. Be careful what you wish for. They're talking about 2 or 3 feet.
Whatever.
Before we finalize the weather report, anything else anyone is looking ahead to, perhaps in some of these earnings? Andrew, what is catching your eye aside from printing money in Zynga these days?
I don't know. You know what? I thought I found look at some of the stuff we did on the blog this week. Like Yum is kind of coming back from the bottom after this bionic chicken scare. That name is starting to look interesting. Kind of selling upside in like Moody's and McGraw-Hill. Now the government has officially put them on the hit list. Or Moody's hasn't yet, but I'm sure they will be sooner or later. There are some interesting things going on in the names. Of course, Zynga, I think I'll stay a little long for a little while. I have to, like I said, can't sell the 2.5 puts anymore because there isn't anything to sell. Can't bring myself to sell 3 puts though. So maybe just rolling into some 2.5 calls and calling it.
Yeah, selling those 3 puts. That's a recipe for a repeat of near-term history. You don't want to go down that road again if you can avoid it.
Like something like a June 2.5 call or something. That's my next.
There you go.
That's my next. I will roll my nickels and dimes into a couple of calls.
Roll the nickels into dollars. That's what it's all about, right, baby? Uncle Mike, what is catching your eye aside from all the free money they're giving away in Apple land?
The State of the Union address coming up, I believe it's Tuesday night. Just curious to see how we're going to invest in infrastructure this year. That seems to be the theme.
Wow. Scintillating stuff. Infrastructure. Well, thank you for that, Uncle Mike. Invest in your local construction company, apparently, from
that seems to be like his soundbite every time he talks. I don't know, maybe it's just me, but it seems to be what I hear. How it's not a tax increase. It's not a tax increase. It's an investment in infrastructure. So.
All right, before we go down the political rabbit hole and alienate whatever listeners we have left here, last but not least, Mr. Viceroy, what is coming up on what are you watching for the rest of the week into the weekend and next week?
What other name? Government Motors, February 14th. I think it's the same day as Tesla. But I think we've covered what's going on for the next week and a half or so.
Government Motors.Alex, you're falling into our deeply cynical libertarian event. You've been on the show too long, Alex. We're starting to corrupt you.
Does Tesla have a bigger market cap than GM?
It's probably getting there. I did see a Tesla dealership, in quotes, in a mall recently out in the burbs of Chicago. So if you can see one of those.
A few years ago, probably had a bigger market cap.
I don't know how you test drive the car in a mall. Maybe they have a back door you can drive out of and then take the car for a spin. I don't know, but I thought it was interesting, a way to sell your cars in a mall, strip mall.
I can get you a Fisker as soon as they put the fire out.
There we go. All right. And with that, I think that is going to do it for the Around the Block segment and also for this episode of the Option Block. Before we go, as is my wont, I like to check in with my cohorts here, my partners in crime on the old All-Star panel to see what they have coming up in their respective necks of the woods. And Uncle Mike, I know, is a little bit too late for our listeners today, but I believe you have a packed house for a webinar tonight and more webinars coming up next week.
Yes, we do. We have Seabass, Mark Sebastian. He spoke last night, because you guys will be listening to this on Friday. Just as we're taping this, it looks like he was the former record holder of RCM, formerly Know Your Options webinar attendance. It looks like he's going to have a shot at breaking his old record tonight, so we're excited about that. The webinar was titled Using the VIX as a Trading Indicator, and we're really excited about that. This coming week, we have Doug Berman. He is a futures broker at RCM. He's going to talk about investing in corn, or I should say trading in the corn markets, and the webinar is going to be titled Cornflation, and he's going to be on the show Monday for the interview block. We're excited about that.
Cornflation, I love it. Good stuff. A lot of puns going on out in RCM webinar land.
We love it.
All right, and Mr. Andrew, what is obviously, as you listen to this, you can maybe have a chance to dial into a repeat of Mark Sebastian's webinar. Hopefully, a lot of you listening to the show have already registered for it. Hence the big uptick in listeners.
Yeah, we might have it even posted on our. Will we post it on our site, Mike? Who knows? I don't know for sure if we do.
I don't know. We're going to be close to. We have a lot. We're going to be turning folks away.
Yeah, so it's I know what this I saw that the presentation for this morning. So, it's right along the lines of everybody thinks. Hey, look at volatility, see what it does, and it will help you do stuff.
And it works.
And it works.
And you can also get your juice for free. So there you go, listeners. And last, but certainly not least, Mr. Viceroy, what is coming up in the land of OX?
I'll do this quickly. February 9th, live event in Dallas. February 23rd, live event in Indianapolis. And March 9th, live event here in Chicago at the Westin Lombard. All the live events are simulcast, so you can come to the site if you can't make it to the event. I plan on making it out to Lombard. February 17th and 19th, for those of you in New York City, once they get the streets plowed and clean, the Traders Expo at the Marriott Marquis. That's a very large event. Lots of folks there, lots of good content. It's a free event. Most of it's a free event, and that's always worth attending. And that's the calendar. There's always webinars. February 20th, we're going to start doing weekly webinars again on the Ideas Hub. And as I mentioned, we're building it out now for futures options. So lots of good content. Come to the site. All the events are free. All the webinars are free. And right now we're building out archiving the webinars, the recordings. That'll be up there shortly. So you can come at your leisure.
All right. Thank you for that, Alex. And of course, we want to encourage all of our listeners, if you're not already, then to surf on over to optionsexpress.com and sign up for an account. Let them know the Option Block sent you, because I think you'll like what you find over there, and it gives you access to all these things we're talking about on the show here today, including the walk limit orders and extend and the Idea Hub and all the other fun stuff that Alex and the gang are working on over in Options Express land. And last, but certainly not least, we of course want to encourage you, if you're interested in learning more about any of the topics we discussed on the Option Block today, the unusual activity alerts, the breaking news, the analysis, the education, or perhaps you just want to check out the archived episodes of this or any other program on the Options Insider Radio Network, well, there's only one place to go. It's theoptionsinsider.com. You can find all of that and much more on ye old website. And, and of course, you can also let your voice be heard for our mail block segment. Just use our comment system. Find us on Twitter, find us on Facebook, or just shoot us an email, questions@theoptionsinsider.com. We'd love to hear what you guys are thinking about for an upcoming show. And, of course, before we go, all of us here on the All-Star panel want to thank all of you in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.